Good evening, everyone, and welcome. Thank you for joining us tonight and spending some time. My name is Dara Yanowitz, and I'm so honored to be here representing both the Federation and JFSA. I'm the JFC Treasurer, Women's and Philanthropy Vice Chair, and for JFSA, I'm the Secretary and the Chair of Strengthening Families. And it's such a wonderful opportunity to see how all of our agencies partner together. I'm so honored and pleased to have all of you with us tonight. I want to thank the Federation of Cleveland for providing all of us this opportunity. Webinars like this have been a tremendous resource for so many of us as we all learn how to manage our finances, among other things, through this pandemic. I also want to take a moment and recognize Jewish Federation of Cleveland's board chair, David Heller, and Erica Rudin-Luria, president of the Federation of Cleveland, for their ongoing leadership. Together, they have navigated these uncharted waters with tremendous skill and compassion for all of us. One of the core strengths of our Cleveland Jewish community is its commitment to caring and providing for others. During these past few months, your Jewish community, my Jewish community, our Jewish community, Federation, agencies, schools, and other community partners have demonstrated strength and resilience as they have worked together to face the impacts of COVID-19 on Jewish Cleveland. Agencies like JFSA and Belfair JCB have continued to operate to support children and families during their most vulnerable times. Day schools continue to educate and build community from a distance, as well as distribute kosher meals daily. And initiatives like PJ Library and J-Hub have found new ways to engage virtually. This is truly an example of necessity is the mother of invention. It is because of the strength of our Jewish community and thousands of generous donors, the Jewish Federation has been able to respond to the many ongoing needs in our Cleveland community. We want you to know that Jewish Federation is here for you, your family, and friends. If you are struggling or know someone struggling during this challenging time, please feel free and do not hesitate to contact Access Jewish Cleveland. You'll see the number on the screen shortly, but it's 216-292-INFO or 4636. Or you can also go online, accessjewishcleveland.org. It is safe to say that due to COVID-19, we are living in one of the most uncertain times in modern history. When planning for this webinar, our goal was one, to introduce you to some of the folks who are available to help you, to share information that would help you or perhaps your friends or family members by providing a platform to introduce you to these experts who are here locally in our community. Get practical tips you can use to make good financial decisions. Tonight, we have the privilege of speaking with three of those experts in our own community, representing not only the organizations where they serve, but also the ongoing collaboration and synergy that exists and more robustly assists community members to face the challenges in their lives. Before I introduce them, I want to mention that we have dedicated time for open Q&A at the end of the presentation from all of you. You can submit a question by typing it into the Q&A box. And please note that at the top of that box, there's a toggle where you can submit your question anonymously. So please feel free and don't hesitate, because if it's a question you have, it's probably a question that others have as well. So right now, I'm going to go ahead and introduce our panelists to you and ask them to just share a little bit about who they are and what they do. So with us this evening, we have Rabbi Dovid, the Director of Operations of Gesher in Cleveland. We have Michal Marcus, the Executive Director of Hebrew Free Loan Association of Northeast Ohio, and Janisse Nagel, the Forward Focus Program Director at JFSA, and Janisse is also a certified credit and student loan counselor. So thank you to all three of you for taking the time to join us tonight and share your expertise. So I'm going to ask each of you to just share a little bit about your organizations. Rabbi, why don't we start with you?
Good evening. Thank you, Dara, and thank you to the Federation and Ellen Miller for their wonderful job of putting this all together. And I would like to thank also my panelist partners, Mrs. Janisse Nagel and Michal Marcus, for the wonderful job that they've done over the years, coordinating with services for the community with Gesher. Thank God we really have a wonderful, wonderful relationship, and the Federation is overseeing that, and we're happy to be here tonight. Just quickly, a little bit about Gesher. Gesher is a career development and benefit center. We assist individuals, families, and small businesses with filing and applying for government benefits and offer career development assistance, which includes aptitude testing, education and job training, career coaching, resume writing, and job placement services for the individual, and business mentoring for small businesses.
Thank you. Michal, thank you for joining us tonight.
Thank you. Good evening, everyone. We also are just thrilled that we have these partnerships in the community, because we really feel like having partners in the community helps us help other people with a holistic approach. I'm the executive director of Hebrew Free Loan Association, and we are a 116-year profit that stems from Jewish principle that one should not charge interest when helping someone in need. And our mission is to help the people in Northeast Ohio who don't have access to traditional lending sources with interest-free loans.
Thank you so much. And Janisse, thank you for being with us tonight.
Thank you. And Dara, I'm thrilled that you're able to moderate tonight. And while it's a negative to be in a COVID-19 environment, the benefit is that it's the first time I've been able to do a Zoom meeting with Michal and Dovid, and it's great to have the collaborative effort. So I'm the program manager, the program director for JFSA's Forward Focus program. And the Forward Focus program provides financial literacy to community members who are in financial distress. An individualized plan is developed with heads of households to achieve financial stability. That individualized plan typically includes budgeting, debt reduction, income sufficient employment, and an emergency savings. So thank you, Dara.
Thank you, Janisse. And without further ado, I'm going to hand the screen over to all of you. I know you have a lot of information to share with all of our participants. Who goes first?
I do, but I'm waiting for the presentation.
There we go. We're all set.
Thank you. The next screen. Thank you. So, good evening. This is an outline of the topics we'll be covering tonight. While it is a lot of information, rather than feeling overwhelmed, tonight's most important takeaway is that we, as the Jewish community, are here to support you. You can always call Dovid Gross, Michal Marcus, or myself for resources specifically tailored to your situation. We regularly collaborate, so no matter where you start, you'll end up in the right place. Thank you for coming here for being here tonight. Our own personal finances, while of the most immediate concern, often are the most difficult to face. So be proud of yourselves for joining us tonight, and thank you for the privilege of your time. Next. Where to begin? No matter which financial guru you consult, the mantra is always the same. Know your budget. That is your actual income, expenses, and debts. And in the COVID-19 environment, plan for income changes, such as the upcoming drop in unemployment benefits in late July, or a return to work, and of course, potential changes in your health insurance coverage. Studies show that people overestimate income and underestimate their expenses, which I have definitely found to be true, having worked with over 350 community households. And universally, nearly everyone dreads the budget process, tracking their income and expenses, myself included. Yet, it is this very activity that the clients I work with continually cite as, while it was fearful for them to begin, once they did, it gave rise to their aha moment. That is, they had no idea that they were necessarily spending X amount in one particular category. That gave them the knowledge to change, and it was very empowering. I'd give the analogy that it's difficult to plan a trip to North Carolina if you don't know where you're starting. If you were starting from Ohio or California, you'd have very different routes. Likewise, it's difficult to move towards a goal of financial stability if you don't know your beginning budget. So once a budget and plan are committed on paper, my clients have generally commented that they have a reduction in anxiety because they feel they've got something in place that they can work towards. And in a follow-up email from Federation, you'll learn how to access this PowerPoint. And at the end of this PowerPoint, there are some templates for the budget and the debt template. And now, Dovid.
Gotta unmute myself. So the next slide. So unemployment. Well, thankfully, the economy, jobs, right? So thankfully, the economy is opening back up and job offers are coming in. I would say over the last 2 to 3 weeks, we're averaging about 3 new opportunities a week. And we're filling them pretty quickly. So if you do know someone who's looking for a job, or if you yourself are looking for a job, feel free to check out the Gesher Jobs Board, www.geshercleveland.com/jobs. Or you can shoot us an email with your resume to info@geshercleveland.org. And you see the other sites here are also very helpful as well. Next. Unemployment benefits, what you need to know. So I'm going to briefly explain how the system works and how the weekly calculations are made. For regular W-2 salary and wage earning employees who will file a regular unemployment application through the unemployment website at unemployment.ohio.gov. They will calculate your weekly salary earnings and give you up to 50%. There's a maximum weekly amount that is adjusted based on the amount of dependents you have. So if you have no dependents, you will be maxed out at 480 per week. And if you have 1 or 2 dependents, you'll get a maximum of 582. And 3 or more dependents, you'll be at 647 per week. For POA eligible applicants, and this means anyone who is not eligible for regular unemployment benefits and is adversely affected by COVID-19, they will look at your most recent tax returns and try to make similar calculations for the weekly benefit amount. If they cannot determine that amount, then they will give you a set amount of $189 a week. Anyone receiving unemployment benefits can receive the additional $600 per week for the weeks of April 4th through July 25th. You need to receive at least $1 in unemployment benefits in order to access the $600 extra for that week. If you have any questions, you can write them into the chat, or we'll explore them at the end of the webinar. Just one last important point to mention is that if you are reduced hours and still getting paid from your employer, you must be making less from your employer than the calculated weekly benefit amount in order to receive the unemployment benefits for that week, which will include the $600. Next. Pandemic/SNAP allotment, otherwise known as PEBT. So if you receive regular SNAP benefits, the additional funds may be added to the card. If you're not a regular SNAP beneficiary, a PEBT card will be mailed to you directly. Each card will have the student's name on it. There is no application for this. They will receive your information for the school your child's enrolled in. Unfortunately, there are many issues with the distribution and many students still haven't received their cards. We spoke with the county this morning and they told us that the remaining cards should be mailed out by the end of this week. Please take note of the last bullet point. There's a technical error in the card activation. When prompted for the last 4 of the child's social, you need to enter the birth year. We are aware that there are other issues activating and receiving cards. The county is aware of it and is trying to address as many issues as possible. It's probably best to wait a few days and give them some time to correct the issues before calling the 866 number. Next. Michal?
Yeah. Hi, so when everything started in March with COVID-19, we realized that there were going to be some emergency financial hardships on people. And we created an emergency COVID-19 loan of up to $1,500. It is an expedited emergency loan for people to help with shortfalls for rent, mortgage, food, childcare, medical expenses. We will look at a credit report, not for a score, but how you're paying how you've paid your bills up to now, to see that you'll have the ability to repay the loan. And this is somewhat different than our regular interest-free loans. I mean, it is still interest-free, and we can usually, once we get a completed application, we can issue the loan within 2 to 3 days. So it moves fairly quickly. Now, if we assess the situation and think you are going to benefit from a larger amount, and that would really help move you forward, we may ask you to go through our regular process, which does require a guarantor, but can go up to $10,000. We work very closely with both Gesher and Forward Focus, and if we feel like someone helping you look at your budget is going to be useful to see if we're the right resource or tool for you, we are going to partner with them and ask you to go speak with them first. But we always work closely, and we do try and refer back and forth to each other. And at the end, I'm happy to answer any additional questions you have about the program. You can find more information at our website at interestfree.org.
Next slide. Thank you. Thank you, Michal. For households who have received stimulus payments, it certainly was a timely gift. And now the question is, will we get a second round of household payments? The democratically controlled House has sent a bill, the HEROES Act, to the Senate. Senate Republican leadership is reticent to approve a second round as the May unemployment numbers came in better than were expected, and they want to keep the federal deficit in check. As states reopen, however, and COVID cases increase, there may be more pressure on Congress to approve stimulus payments. In summary, no one has the final answer. We can only wait, see, and hope, but stay tuned in July. Next slide. So what is in your control? Utility payments regulated by the Public Utilities Commission of Ohio are not currently disconnecting customers. So if finances are tight, you don't lose access for failure to pay. However, if you have missed payments, to prevent bigger problems when disconnections are again permitted, I strongly encourage you to contact your providers and set up a payment plan. Possibly you would qualify for assistance programs such as HEAP and PIP. And that is Gesher's area of expertise, just as a nod to where you go for that. At least beginning the dialogue with the utility providers will likely reduce anxiety because you're making a plan. Next slide. Thank you. Rent. Given when the COVID-19 shutdowns began, some of you may have already deferred rent or at least a part of it, and so you've had dealings with your landlord. Since most landlords are private entities, the government can't set one standard protocol for rent deferral. Instead, it is a one-on-one dialogue with the landlord who has his or her own expenses to cover. To date, during COVID-19, landlords have had a limited ability to enforce evictions and generally have had more incentive to work with tenants. Housing courts have largely been closed, and each housing court will determine when it's going to reopen. It is anticipated, however, that housing courts will be opening soon, and as such, some landlords are starting to post 3-day notices. If you can't pay rent in full, I suggest you approach your landlord with a realistic short-term repayment plan. This doesn't guarantee success, but it increases the likelihood as you're identifying for the landlord when you're going to come up with the remaining money in a short period of time. I would say if you're under tremendous COVID-19 stress at this point, this would also be a great time to reach out to HFLA. Lastly, for low-income families facing eviction caused by COVID-19, Eden has emergency rent assistance. It does require extensive documentation, but I did include criteria at the end of this PowerPoint. Next. Mortgages. For homeowners, deferred mortgage payments are a bit more complex than the rental process. Most mortgage companies readily agreed to defer payments with no impact on credit score. But the most important question is, how do the mortgage companies expect that you're going to repay those missed payments? Next slide. So you notice there's a lot of information here. A number of my clients have obtained mortgage deferrals, but nearly none of them asked in their initial conversation how they need to repay those missing payments. So there are 4 key factors that affect the repayment options that your mortgage servicer may end up offering. 1 is the type of loan, 2, the owner or investor requirements, 3, your servicer, and lastly, what's your mortgage loan status just prior to COVID-19. So 75% of mortgages are government backed. This includes Fannie Mae, Freddie Mac, VA, and FHA mortgages. So if you don't know if your mortgage is government backed, you can ask your servicer. These loans, the government-backed loans in the COVID-19 environment, generally have greater repayment flexibility. In addition, under the CARES Act, if you have a government-backed mortgage, you are eligible for up to 180 days of missed payments in forbearance. And if needed, you can add another 180 days on top of that. Owner or investor requirements for non-government mortgages may have more onerous repayment terms. If your servicer is what's called a non-bank, such as Quicken Loans or Mr. Cooper, they may have less flexibility in their repayment terms because of their own funding needs. So what are the repayment options for missed mortgage payments? Note, the repayment options that I'm going to explain may or may not be available for your particular mortgage. Rather, I'm trying to educate you on the array of repayment options in this COVID-19 environment. So the first option is that missed payments are repaid either in one lump sum or over a period of 3 to 12 months. So they're going to take your base mortgage payment and then they're going to add on top of that. Obviously, a little bit challenging potentially for cash flow. The second option is that the missed payments are added on to the very end of your mortgage. Clearly, this is the very best for your cash flow. In both of these scenarios, documentation is minimal and neither will affect your credit score. You may also hear the term mortgage modification. This is quite different from the 2 previous options I explained. In essence, the mortgage company reevaluates your hardship based on extensive documentation and may decide to permanently decrease your monthly payment. It is a longer, more involved undertaking, and it may impact your credit. Whatever you do with your mortgage, know that the responsibility for accuracy relies with you. Document, document, document the conversations that are happening and keep the paper trail. Also, beware of scams. Remember that the COVID-19 call volume for mortgage centers is extraordinary. For anyone who's tried to get through, the call times can be well over an hour. Extra staff was onboarded very quickly to help accommodate the high call volume. Translated, not all the representatives are equally knowledgeable. So knowing repayment possibilities allows you to ask questions and ensure that you're getting the best options. Next.
While we're getting to the next slide, I want to remind people the Q&A box is available and you can submit anonymously. We're getting a few questions, so I just want to remind people, do it while it's fresh on your mind. Go ahead, Janisse.
Thanks, Dara. On to a less complex topic, credit cards and auto loan payments. Most lenders are offering relief on credit card and automotive payments. But again, the key question is, how are you required to make up the payment? I encourage you to check the company website for any special assistance it might reference. And when you speak with the customer service rep, you can best advocate for yourself by being knowledgeable and being infinitely polite. Since COVID-19, fraud and scams have risen dramatically. Check your statements to ensure accuracy and beware of scams seeking out your personal information. Next slide. Federal student loan payments are suspended through September 30th and currently are interest-free. In August, borrowers should receive correspondence saying that payments will be resuming shortly. I am a certified student loan counselor, as Dara mentioned, and one thing I know in working with the student loan servicers is that anything that their computer says is considered fact. Translated, check your student loans online to ensure that payments indeed were suspended. And if you don't receive a notice that your payments are resuming, it's up to you to contact the servicer. Do not assume anything. Verify for your own benefit. Next. How to improve your credit score. I wish this was a magic elixir slide, but it's not quite that. So as we all know, credit scores matter. But what are the components that determine your score? Well, generally, people focus on payment history, which is the largest factor at 35%. Fewer people understand the 30% weighting, which is labeled amounts owed. This category is commonly called the credit utilization rate. The credit utilization rate shows how much you owe on credit cards divided by the maximum amount that you could borrow. So, using a simple example, assume you only have one credit card with $500 owing at statement cutoff, and your card limit is $1,000. Your credit utilization rate is the $500 balance divided by your credit limit of $1,000, or 50%. This means that you have used 50% of the maximum amount you could have borrowed on your credit cards. Note, this ratio is calculated based on the balance at statement cutoff. So it really doesn't matter if you pay your balance off in full or not. It's based on statement cutoff. To benefit your credit score, you need a credit utilization rate of 30% or less. The lower, the better. That is, for credit score purposes, it is better if you borrow less using your credit card. Why? Because you're considered a lower risk borrower if you have less reliance on your credit cards. This is somewhat ironic as credit card companies encourage usage by incentivizing with reward programs. But if you want a quick boost in your credit score, pay down your balance a few days before the statement cutoff. So in my theoretical example, you could pay the $500 statement balance down to $300 for a 30% credit utilization rate, and your credit score would benefit. And it is a pretty quick benefit that you see. The remaining credit score components are length of credit history, which is the longer you've had a card, the better. So avoid canceling your oldest cards. New credit, that is the number of inquiries into your credit history as you're applying for new borrowing. And you'll notice sometimes you'll hear them say it's a hard inquiry versus a soft inquiry. A soft inquiry is not being reported to the agencies. A hard inquiry is. And lastly, the type of credit. That is, they prefer a mix of short-term and long-term borrowing. So like a mix of credit cards, car loans, mortgages, that type of thing. Next. Taxes. We're nearly at the finish line. So tax deadlines were all extended, And it's anticipated that the IRS will be more flexible than usual in crafting repayment plans. So if you owe and can't pay, breathe deeply, and before you assume the worst, know that repayment plans are an option, and they may be more palatable than you think. You've endured more than an Energizer battery tonight in staying the course with me and Michal and Dovid during this presentation, and I greatly appreciate your focus. And for reference, the following slides show the budget and debt templates that I mentioned, along with the criteria for Eden's emergency rental assistance. And you'll again have access at through an email, you'll get more information. That's it. Thank you, Dara.
Thank you, everybody. Wow, that was a lot of information. I learned a lot. I think everybody else did too. We have a few questions I'd like to throw out to the group, and we're going to have kind of a discussion about it. So here's a question that came across. I have a friend who is in trouble with credit cards, but she won't ask for help. What should I say to her? Thank you for that question.
My guess is that they're very embarrassed and ashamed because people don't want to talk about finances. If there's anything that I would say, it would be to say to them, look, if at any time you wanted to talk to somebody about just about your budget or finances in general, there's someone I know at JFSA, they've got a program, and you might just give them a call, because then it takes it out of the personal connection and you've given a handoff in a non-threatening manner of a budget instead of you're having problems with your credit card.
Great. Thanks, Janisse. Michal, Janisse shared a lot of information with us about credit score. If someone is coming to you, to HFLA, does credit score matter?
So no, we do not look at a credit score. We do run a credit report because it tells us a story. It shows us how people pay their bills. It shows us where there have been glitches. And then we are able to ask, what happened here? Maybe someone's car broke down and they fell behind on other bills, or someone was sick and out of work, or COVID-19 happened. So we're really looking more for the story of why there were credit issues. Now, clearly, if someone has everything in collections and has never ever tried to pay a bill, that will be a red flag for us. But no, the score does not really represent anything when coming to us.
Great, thank you. Let's see, I have another question here. Maybe Dovid, you might have a response for this one. Which business sector will be most likely to be open for hiring in the next quarter? Where are the jobs?
Yeah, well, I can tell you what's coming in. We've had a couple of accounting jobs. They seem to be, on the hotter end of things. A few project manager, operational jobs. But I would say definitely I've seen an increase in accounting controller positions.
Great, thank you. Janisse, you mentioned something that really sparked in my mind about how many scams are out there these days and how many things just come across our screens and in the mail. I got one in my mailbox, believe it or not. Where do we go to verify if something looks too good to be true? How do we verify if this is something legitimate? How do we know?
The first thing I would do, especially if it's asking for any kind of personal information, is go to the website, the legitimate website for the company, and be careful because there can be websites that are very, very close. But go to the legitimate website for the company and call that 800 number and ask them. So don't use the information that's provided in what's being mailed to you. And it is amazing, Dara, how slick they are getting with what they send out to make it look like this is the real deal.
Yeah.
Can I
Okay,
just
so-
also say that Cuyahoga County has a consumer protection department run by Cheryl Harris. They also have a Facebook page where they try and highlight various scams that they are seeing in the community, and that's another good resource to call them if you are unsure if it's a scam.
Great,
I've
thank
spoken to
you.
her and she is very, very helpful.
Yeah.
David, a question for you. Does Gesher guide people to apply for unemployment, and how does one know if they are eligible or not?
So they can call us and we will help them walk through the process. Depending on what their situation is, we will guide them to either the regular unemployment or to the POA site. And we can basically give them a rough idea of whether or not they'll be eligible for actual unemployment.
And do JFSA and or Gesher provide unemployment services for community members?
So for Gesher, we help people through the application process. If you have any questions, our staff are available and can answer those questions.
I think Dovid also mentioned early on in his opening some things that I'd just like to reiterate, and that is through, you can either, we have an individual who will help you with your resume, help you with cover letters, either going to Gesher or ourselves, we direct you to the exact same spot. They'll help you with your LinkedIn profile. They'll help you with setting up a plan for, okay, you know, I'm having a little bit of difficulty right now. I'm kind of depressed. I'm having a little bit of difficulty getting myself motivated, and they'll help you put together a plan for how you're going to go about tackling your job search. And we can also do mock, we also have access to mock interviews as well.
Great, thank you. Here's a question. I worked part of the year out of state. When I applied for unemployment, the system won't let me continue the application past that point. What do you suggest I do?
So actually, if you are working in 2 states, you can be eligible in 2 states. The 2 states will have to figure out the balance of how much or who's going to pay what, but you should be applying in both states. So if you're having an issue getting past Ohio, then you can definitely try the other state. And there's always a call center to call in and have a representative look at why the system is blocking you out in Ohio.
Great, thank you. The next question. Even though I am still employed, would it be smart to take advantage of student loan deferment to build up savings short term?
My answer is that depends, but I generally would say yes, it is a good idea. And the reason I say that is when I say it depends, if you have a job that you feel is a very, very stable job, that you don't see any chance of that job going away in a post-COVID-19 environment, then maybe you don't take advantage of it. But if you have any question at all, might my job go away, then I would suggest you do take advantage of that, because there's going to be the change in unemployment benefits, and we don't know what that's going to look like after. And it's going to be a much cheaper source of funds than if you ended up borrowing under your credit cards.
Great, thank you. People have their thoughts are flowing now.
Oh,
Next question.
That's good.
I am trying to increase my savings more now than ever. Should I focus more on my 401k or my emergency fund? What percentage of my income should I be contributing to either?
So the first thing I'd say for the 401k is if your employer matches, you absolutely want to commit at least as much as your employer is matching. And oftentimes that might be in the range, it might start at 3%. So I think though that there's a balance, and there's been a lot of conversation actually about this lately. The emergency savings, it's very important that you build up some cushion. And I would say in this environment, at least to get to 3 months of a cushion is very helpful. There have been changes so that you, under the COVID-19, you could tap into your 401k if you needed to. But mine is, I try to keep a balance there so that you have something for a rainy day.
Go a little bit different direction. Is the system for applying for WIC changed? Do I walk into the office or can I apply online?
Okay, so the WIC program is run through Metro Health locally. And on 7th Circle, the local WIC office, you can call on the phone and they will process everything up until the reloading of your card. For that, you actually have to walk into the office to get done. That's not something that they can do remotely. But otherwise, everything else can be done over the phone.
Thank you. What do you expect to see during the summer months? Will unemployment issues rise or decline? Will people be more in need or less? What can be done? Who's got the crystal ball out?
I could talk about it a little bit. I think it's between me and Janisse. That's like a good one. So, I mean, as the economy gets back together, hopefully unemployment will get lower and more people will get jobs. You know, restaurants are open and companies are opening up. Business is starting to flow. So that should create callback of new jobs and old jobs. And in terms of more in need, so as the expanded $600 weekly gets cut from the unemployment, those who are unemployed may have more needs because right now with the extra 600, you're getting a big push. So as that simmers down, you may fall into more need.
There's just tagging on to that. Right now, at the end of May, the unemployment number was 13.3%. And the projection that I've been hearing for the end of the year is 9.3%, which is still an astronomical number compared to where we've historically been. So as Dovid said, you'll see people coming back into the workforce. But what there's a question about is, are we going to get another wave of layoffs, particularly at the white collar level? The reason being that as more businesses open, but their expenses are that much greater than they have been before, they're going to need to cut payroll in order to be able to move forward. So I think that there's going to be some fluidity with a general direction of down, but I think we're still going to see a lot of pain.
Thank you. What advice would you give people if there is a second stimulus payment? Should that money be spent paying up debt or perhaps placed into savings if one can do that?
My first suggestion, again, with a limited fact base, but my first suggestion is if you do not have an emergency savings account, the first thing is get some emergency savings, even if it's only 1 month, but get some emergency savings, because if your car breaks down, you need to be able to take care of it. At the same time, balancing, I'd look at how high rate, how expensive is your debt. And if you've got debt that's 25% APR, then you might want to look at really balancing, putting some of it towards your debt and some of it towards emergency savings.
Great, thank you. Michal, there was a question that someone asked about when looking into an HFLA, they need a guarantor. Why is a guarantor needed?
Okay, so for our COVID-19 emergency loans, we are not requiring a guarantor, but we are checking your credit capabilities, again, without the score, but how you pay your bills. Our general loans, be it our regular loans or small business education loans, we require the guarantor because we are lending interest-free. So not only do we not make money on every loan, we actually lose money on every loan. And it is our one source of backup. The loans we are able to make in our community are because of donations from individuals in the community. And we have a fiduciary responsibility to be able to recycle that money in the community. We have a 97% repayment rate, and we want to keep that and be around for another 116 years. So that's why.
Very good. Thank you. Janisse, how does someone get a free copy of their credit report? And is that something that folks should be doing?
I think it's always good to check your credit report. I mean, at minimum, you should be checking it once a year, and it's free once a year. You could also stagger it because each agency is going to give you one, so you could theoretically get it 3 times during the year. You go to annualcreditreport.com and be very careful, because there are some sites that look very similar to that, but it's a scam to get you into paying for their service, and it's very hard to get out of it. So it's annualcreditreport.com.
Great, thank you. So here's something interesting. JFSA and Gesher sound like they do fantastic services for the community, and I can vouch that they absolutely do, as does Hebrew Free Loan. Do you think enough people know about your services? And if not, what can we do about that? What's the best way to get the word out, and how should we let folks know that you're there to help?
I'd start with this webinar and asking that people on it spread the word. I think the greatest challenge that I've found is, one, people generally don't want to take the plunge in talking about their finances until they're in major crisis. And so it would be great for people to know that if they just want to bounce an idea off and they're just not 100% sure, but they don't want to bounce it off a friend, it's great if you can give a call. And it's such a tag team that once you enter a part of the circle, we're all looking for ways to connect you with the best possible option. I had a client that Gesher referred to me. I worked with them for 2 years until they were in a position that they could get a Hebrew Free Loan, which was really going to help them, at which point I turned them over to HFLA. So I'd say, if anything, the word out there being, if you've got a question about finances, if you have a question about benefits, if you're thinking that maybe you're going to get a payday loan, stop. Let every button go off on you saying, make a call first. Or if you have a friend, make a call first.
And I will throw out, if you're not sure which of these agencies or organizations to call, I'm going to remind you and refer you back to accessjewishcleveland.org or to the phone number 216-292-INFO or 216-292-4636. And the folks that are on the other end of that line have all of these resources at their fingertips and will match you up with the right agency, person, or organization. Next question. Yes.
Well, I just wanted to say, we all need help at some point. I know that it's really hard, as Janisse said, to talk about our finances, and it can be embarrassing because we think we should be able to do better. We should be able to handle it on our own. First of all, when you're talking to one of our agencies, it is strictly confidential. Nobody else has to know. And we only talk to each other to help you if we have a third-party release. So we are very careful about that. But it is okay to ask for help if you need it.
Thank you, Michal. And I don't want to rush past that. Dovid, did you want to add anything to that?
Yes, I just second that, what Janisse was saying, and that is spread the word. You know, if you have somebody, a friend, a cousin, a family member, somebody, a workmate who you think is struggling, just, you know, let them know that they can give a call and, you know, what's available and who can help them. I believe most of our clients are referral based. You know, I get emails all the time. Somebody's told me I could reach out to you, or somebody told me I should try to call you and discuss this. Do you help with that? Absolutely. And if I don't, then maybe Janisse or Michal do. So. Definitely.
And I know that your clients come from all over the area, from many, many different zip codes, communities, all different walks of life. Michal said, everyone needs a little something at some point, and you're all there to help confidentially.
I think one of the things that really got me involved in Forward Focus in its infancy is that I think today, it used to be that you could trust financial institutions. So you felt if I go, they're going to be advocating on my behalf. But that's not necessarily true today. You don't know if you're getting the straight story. So at a time that you're the most vulnerable, to be able to go to a resource within the Jewish community that's not being paid for their services, but is really only doing it because they're passionate about helping you move forward, I think is a great place to go.
Thanks, Janisse. We do have a couple of more questions in the few minutes that we have left with everyone tonight. I want to try and help everybody who's written in. What advice can I give my teenage son in college? He doesn't have a job this summer, and I don't want him to get into trouble. Not sure what kind of trouble, but I'm assuming that's financial trouble.
So the good thing is that he's in college. That should keep him busy for some of the time. There are definitely some more college programs, and I know that Tri-C is even offering like a year of free tuition for a lot of their programs. It's a great time to learn and adapt. Now we're going to see new courses and new things that are coming about because of the changes that COVID-19 has brought about us. Everything is done virtually. So consider a 10-week course for minimal $2,000 in social media marketing or digital marketing. Really, IT boot camps and coding, they're short and they're not necessarily very expensive. There are assistance programs out there, like Ohio Meets Jobs has an $8,000 grant that they give out. I know people that have covered the entire cost of their IT boot camp, and now they have a job. So that's number one. Number two is if he's already in a very busy college schedule and can't take on more, there are definitely a lot of, the restaurants are getting back to work, and unfortunately, because people are getting the extra $600, they don't necessarily want to go back to work. So get on the bandwagon now when all of those opportunities are available, and you can have an easy career at nights or throughout your day part-time, something like that to supplement your free time and expenses.
Great. And this could be our last question. But if you still have a question out there, get it in now. We'll sneak it in. I'm struggling with finding a job right for me. Who would do or give me career guidance?
So both, as Janisse mentioned before, both JFSA and Gesher have access to a resume writer, career coach. Gesher even gives aptitude testing. And there's definitely a resource. So call one of us, either one is fine, and we're going to get you to the same source and get you help to discuss what exactly your needs are and what your interests are, and we can figure you out.
Great, thank you. I'm going to ask each of you any final thoughts in these last moments we have. We've had a large number of people who have been sitting with us for this last hour, some really terrific questions. Any last closing thoughts, last piece of advice?
I think the best is that the question that asked, if there is another round of stimulus monies, what do I do with it? Because what we did see in the 2008 recession is that people kept thinking things were going to get better so much quicker than they were, that they didn't make adjustments in their lifestyle. And so my thought would be, it's a great time to really buckle down and see how creative you can be in your savings. But no matter what, if things fall apart, most important, know that we are definitely here to support you, and it is without judgment, and it is very confidential.
And I'll add on to that. Adapt. We're at a time when things are changing adapt. There's lots of opportunities. Things are going in many different ways. You know, change is hard, but it brings on a lot of success. So keep your eyes open, adapt to the future. And in terms of your finances, don't rush into anything. You'll see the big investors, the wealthy investors are not rushing to do things. You know, the young and inexperienced people who want to make a quick buck are trying to ride the system. I hope that they're okay, but just looking at the professionals out there, they're cautious. They're holding, they're waiting. Get advice and don't rush into anything.
And I concur with both of them that, you know, don't rush into things. We're here to call if you're not sure how to go about handling certain financial issues. And what Janisse said is we saw in the last recession as well, where people had been used to earning a certain income and then they were struggling because they did not adjust their budget to a new lower income. So we're all in a hard situation now, and we just have to be as adaptable as possible.
Thank you. I want to thank Michal and Janisse and Dovid for your time, for your expertise. I want to thank all of my colleagues, both lay and professional, for your dedication and work for this community. Please see the information on your screen, accessjewishcleveland.org. I know I certainly learned a lot tonight. I hope you all did. You found some resources for your own financial toolkit and hopefully found a few things that maybe you can help some family and friends as well. So I enjoyed being here with all of you. I hope you enjoyed it too and learned a little bit. Stay safe, stay sane, and stay healthy. And we'll see you the next time. Good night, and thanks again.